in the last year, in the last 3 years, the responses to COVID, the fiscal and monetary responses that, in many countries are causing hyperinflation and, fiscal crises. We're seeing protests and riots all over the place. Well, where do these people go for an insurance policy against an implosion in their purchasing power and wealth? It is in something like Bitcoin. Bitcoin is an insurance policy, and it is an insurance policy for everyone against confiscation of wealth.
And there you have it from Cathie Wood. She's talking about Bitcoin being that insurance policy, not just for you, not just for me, but for everyone. Now, we just had the Fed's FOMC meeting the past couple days, and we did another rate hike for 0.25%. As we've been talking about on this channel, every time the Fed continues to increase, that's tightening money, that's taking money out of the supply. It's making it harder for the everyday consumer and everyday retail investor to get access to money. Does Cathie have a point where she's saying that Bitcoin is that insurance policy? And if so, are you listening? If you want to hear more from Cathie, you can check her out at Cathie Wood on Twitter. And once again, she's the founder, CEO, and CIO of ARK Invest. We'll hear more from Cathie before this video's out. And Cathie, if you don't know, she's on record stating that Bitcoin could hit $1.5 million in just 7 years. So we'll talk more about this before the video's out, and we'll hear more from Cathie, so make sure you watch this one to the end. Before we get to any of that, what's happening, crypto crew? Sean's coming back at you, another cryptocurrency video. Before we get started, if you like this content, go ahead and smash that like button.
If we are all in, then we can actually use it.
Yeah.
But if we're like wishy-washy, and then some foreign actors come in, and I mean by foreign I mean like someone other than you and the other people that are investing, honestly, they come in just with the idea of manipulating it with it because it's competition of fiat currency, and they just tank it with it. If you're all in, you can weather those storms.
It's very difficult to with cryptocurrency from the outside. That's the beauty of it. The
you
danger,
can't buy it and sell it and manipulate the price.
It's very difficult. It's extremely difficult because of the distributed nature of it.
This is starting to become the norm. You see individuals like Joe Rogan and Lex Freeman talking about Bitcoin's price action, cryptocurrency, and why it is going to be that new monetary system and monetary rail when CFI is no longer what is the standard. People don't realize what's going on. This has become the norm. We're seeing a lot more celebrities, a lot more influential individuals talking about Bitcoin, coming out and saying they've invested in Bitcoin and also cryptocurrency. Are you paying attention to what's going on? This is still really early on in this game. What's coming next is regulation, then further adoption. And then once regulation happens, more clarity of Bitcoin as legal tender and recognizing cryptocurrencies as actual assets. Now, going back to what Cathie Wood's saying, that Bitcoin could just hit 1.5 million in just 7 years, we're taking a look at the charts right here. If we take a look at the Bitcoin price chart, we notice something, and we notice this macro blue trend line, which is a very important trend line. If we zoom into the price action, why do we say this? So we're looking at a range here. We're looking at a range from back in 2013 to present day. After the 2020 halving, we came up and hit our head right on this blue trend line. Then came back, flipped the resistance into support, and then potentially had a bump and run pattern that failed because we were in a bear market. The bear market fell below that trend line. We came back up above it, flipped resistance to support, and then blasted back up to put a new all-time high in. But since we broke through this back in 2017, we have not fell back below this trend line. We came down, this was the bottom of the 2018-19 bear market. We had a brief wick below it with the pandemic dump, but also after we hit that $70,000 mark, we came back and bounced right off it. Now, we're not out the woods yet. Could we see this bounce like we did back here and then come back down and have a multi-year bear market even deeper than what we are? Well, that's still to be determined. Nobody knows, but all in all, it looks like this is an important trend line to note. If you note where the next halving is, around March of 2024, we're a little over a year away from that, But if you look at a year from each halving, the halvings are denoted by the orange lines. We don't have a major fall below this. Even this, a year before this was right here, we already were, at the bottom, and we didn't come back up to that trend line until after the halving. So right now, there's a good chance the bottom is in, and this macro support trend line is something to note. But if we look out into the future, where is the bottom 7 years from now? So right here is 2023. So the bottom will be around $330,000 if this support line is respected. So note one thing. Every time we have a run up off of this, we do have an extension from this macro, from this trend line. So it could be a 270% extension, could be a 500% extension, but you get the picture. You see where I'm going with this. Now, if we go up to 2030, how long does the extension have to be in order to hit that $1 million threshold that Cathie Wood's calling for? And it's not anything out of the ordinary. It's really just a 200% extension from this macro trend line, and that'll get us to that $1 million threshold. And as you see, the bull market is getting ready to start here based off of history. We have an 80% correction, then a rip to the upside. 80% correction, rip to the upside. 80% correction, what's going to happen in the upcoming years? A new all-time high and also a rip up to the upside. Now with that, let's finish hearing from Cathie Wood and what she thinks the Fed's going to do moving forward.
And today we got down to, I believe, 3.35%. If you look at the 10-year bond yield as a proxy for what effectively nominal GDP, give or take a little, nominal GDP growth will be over the next 10 years, that doesn't leave a lot of room for much inflation if we're going to have real growth over the next 10 years. So I think the markets are speaking loudly. I think the inverted yield curve, we're still around 70 basis points. We haven't seen it this low since the early 80s. I would not be surprised to see the Fed cut rates this year. And one of the other reasons that we're very focused on this message that the bigger risk is deflation. It's also a very big opportunity. When we look at deflation, there's good deflation and there's bad deflation. The bad deflation is caused by demand destruction. The good deflation creates demand, and that is what our research is centered on, which is technologically enabled innovation that rides down learning curves, which are expressed by cost declines.
There you have our ARK Invest Cathie Wood. She's talking about we're going to be going towards a deflationary pivot, and we're not going to be seeing as much inflation as people expect over the next decade. What's your thoughts on this? Do you think Cathie has a point? Cathie is a respected investor in her own, and nobody has a crystal ball. But one thing's for certain, in order to be on the plus side of what's to come in the future, just hold on for dear life. And if you guys like this content from the Bitcoin Bros, make sure you go ahead and subscribe to the channel. We do this every day for you. And also give us a like. We appreciate the support, and we'll see you next time.